Well, 2011 was an excellent year financially for LMA, achieving our ambitions both at the top line and bottom line. I think that bears out our decision in 2010 to focus the strategy on airways and anaesthesia products, disposing of core business activities, which has now been successfully completed. If I talk about the top line first, sales growth at 14.6%, increased in sales to $123.9 million, was very successful performance, given that we'd had 3 prior years of flat sales. So I think, again, that bears out that strategy. The key factors, I think, that drove sales in 2011 were LMA Supreme, the product. Our premium product grew by 42% and 28% respectively in international and US. The LMA international sector grew strongly overall, with particularly notable performances in the developing markets of China and Brazil. That was a key factor. I think also the successful integration of our 2 most recent acquisitions. 2 different kinds of acquisitions, really. The back end of 2010 was Wolf Tory, with what we're calling the LMA atomization product range. That really was to expand our product range, because obviously we were fairly focused on laryngeal mask, and we need to expand that within anaesthesia and airways. That's been successfully integrated within the US direct sales market right from the beginning of 2011, and also integrated within our international distribution markets within the second half of the year. So that's been a successful acquisition. Also, Vitaid, the Canadian distribution company, who distributed our laryngeal mask there, and now we've acquired that, taken control of our distribution in another important market, and also got the benefit of a number of other distribution products to add to our range. So that's been very useful. So the successful integration of those was key. But I think also another key underpinning factor for the whole of 2011 really was the maintenance of our market share in the US market, the largest medical device market in the world. And that's been going on for a number of years, and obviously helping that has been the successful renewal of some key GPO, or group purchasing organization contracts. So I think they're probably the key factors behind the sales growth. Moving on down through the income statement to the bottom line, if we take gross profit first, gross profit grew by 14% to $72.9 million. And I think it's important and pleasing that the gross profit grew at the same rate as sales, because it really shows that we've maintained our margins. There are a number of factors that affect the gross margin, things like the product mix, Singapore dollar to US dollar exchange rates, and the addition of new products, both acquired and through the distribution network. So all those factors combine, and this year, or 2011, we generated a gross margin of 59%. And although that's been gradually declining over time, I think that's now stabilized around that 59% mark. If we look on beyond gross profit, we get down to the selling, general and administrative expenses, SG&A. And here I think we've been able to demonstrate in 2011 quite a number of operating efficiencies. And we've brought that SG&A as a percentage of sales down from 44% in 2010 to 41% in 2011, which is a combination of increasing sales and tight cost control, which I think is important for us right now in the current environment. So all of that results in an improvement of operating income by 42% to $16.6 million. And EBITDA, earnings before interest, tax, depreciation and amortization, another key measure, has grown to $22.3 million, and reflects a margin now, EBITDA margin of 18%, which is pretty strong. I think on top of that, we successfully negotiated the settlement of our long-running IP dispute with Ambu, and have a positive outcome of that, of a settlement of $5 million net in our favour. So again, that was another positive from 2011 to put that behind us. All of this has generated great cash for us during the year, as we have done over a number of years now, and we end the year with a strong cash balance and a strong balance sheet. The cash balance is being $26.4 million, which gives us plenty of ammunition for looking for acquisitions going forward. So all in all, I think 2011 was a very successful year for LMA.